Hi there. In this video, we're going to continue on with our in-class example comparing variable costing and absorption costing. We've already done the first part of requirement 1, which was to compute the absorption costing income. So now we're going to look at the determination of the variable costing income for Schneider Company, again for its first 2 years of operations. And so here we are. In the blue column, 2019, and the green column, 2020. We start with our sales, and of course, regardless of whether you're using variable costing or absorption costing, your sales are still the same. So 120,000 units at $45.22 in 2019. Then we look at our variable cost of goods sold section. We start with our opening inventory, which of course is 0 in this example. And then we determine our cost of goods manufactured. Well, the cost of goods manufactured for 2019 is 140,000 units produced times the variable cost rate for variable manufacturing costs of $8.05. Well, that's $1,127,000. And then we subtract the ending inventory. Recall that there's 20,000 units in ending inventory, and we're going to apply our $8.05 rate. So that gives you ending inventory of 161,000. So 0 plus 1,127,000 minus 161,000 gives us our variable cost of goods sold of 966,000. And then we subtract our non-manufacturing variable costs that are based on sales, not production. So for 2019, 120,000 units sold, and the non-manufacturing related costs provided in the data, the variable cost, $3.11, giving you 373,200, which means total variable costs are now 1,339,200. And of course, sales minus variable costs is contribution margin of 4,087,200. And then all we do is subtract our fixed cost, which is a lump sum of $4 million for 2019, giving us operating income of $87,200. Just that simple. So now we'll look at 2020, 110,000 units sold at a selling price of $43.44 for total sales of $4,778,400. For the variable cost of goods sold, the beginning balance is the 161,000 that was the ending inventory from 2019. And then we add in cost of goods manufactured based on production of 100,000 units at the 2020 variable manufacturing costs of $8.45. So that's $845,000. The ending inventory in 2020 is 10,000 units, and we'll apply the same $8.45 variable cost. So that's $84,500, giving total variable cost of goods sold of $765,500. And then the non-manufacturing costs for 2020 are based on sales 110,000 times $3.31. So that's $364,100. Total variable costs for 2020 then, $1,285,600, giving us contribution margin $3,492,800. Our fixed costs happen to be the same in 2020. And so this time for 2020, you now have an operating loss of $507,200. So that's how we do the variable costing income statement, factoring in beginning and ending inventories.